Hey guys, it's Jeb here, and in today's video, the Federal Reserve has cut interest rates for the very first time since the beginning of the 2008 financial crisis. And the reason that's significant, guys, is because typically the Federal Reserve only cuts interest rates when either a recession is about to start or a recession has already definitionally begun. So in today's video, we're going to be discussing whether or not this is a warning sign for the global economy, and we're also going to be discussing the potential impacts that something like this may have on the Bitcoin market. Speaking of the Bitcoin market, guys, we're also going to be looking at this logarithm chart that people talk about all the time. If you draw a trend through the general direction that Bitcoin has been moving, and if you extrapolate it out into the 2020s, that puts Bitcoin rallying to around $1 million halfway through the next decade. So in today's video, we're going to be discussing whether or not that is even close to feasible, or if that's even going to happen. Perhaps it will that early. You guys know I do believe that Bitcoin will go to $1 million eventually, but halfway through the 2020s, we're going to be discussing that in today's video. And of course, guys, to kick off the video, we do have a little bit of short-term technical analysis. But before we dive on into it, guys, I do want to remind you that we are still running that sale on the Cryptocurrency Technical Analysis Academy. If you want to learn how to trade and profit in the cryptocurrency market, I highly recommend you invest in your education. The Cryptocurrency Technical Analysis Academy is a great, concise place for you to do so. There's a link and a coupon code in the description down below. So guys, without much further ado, let's go ahead and dive right on into it. I do want to start off here with the shorter term technical analysis on Bitcoin, then we're going to work our way through to the concepts discussed later on in the video. And the main reason I want to start here on the short term is because I want to give you guys a little bit of a different perspective on Bitcoin than we've been looking at here over these last few videos. As you guys can see, Bitcoin very clearly had a downtrend right here. As you can see, Bitcoin actually broke bullish through that downtrend of resistance with a lot of exuberance, and we actually came down, tested it as support, and continued to rally from there. And last night, as we expected in yesterday's video, Bitcoin did actually go ahead and rally up to and slightly above $10,000. And if we look out here on slightly longer term charts, then we can see that Bitcoin has actually started to garner resistance at this downtrending midline of resistance that kind of constitutes the center of this downtrend that Bitcoin has been in for the last month and a half or so. The next thing I'm looking for is for Bitcoin to break this, guys. If Bitcoin breaks this, then perhaps we've actually set our bottom, and perhaps Bitcoin can actually start that rally. Like I said, guys, I've always kept the possibility of a new Bitcoin rally forming on the table. I just need to see confirmation of it. So far, we haven't seen confirmation, but we might be getting close. As we can see here, guys, Bitcoin has actually shown some strength over these last 48 to 72 hours or so, and is actually moving to the upside. Should Bitcoin break this downtrend of resistance, that's going to be the first of many confirmations I'm going to be looking at for a reinvigorated Bitcoin rally. One last thing I want to point out before we move on to the longer term stuff is that Bitcoin has actually set an equal low down here. As we can see, both of these bottoms are set down here around $9,350 or so, where the previous low was higher. So Bitcoin right here made a lower low, but more recently Bitcoin has made an equivalent low. That is a move in the bullish direction, and I'm happy to see that. I'm going to keep a close eye here on Bitcoin over the next couple of days because I do think there's potential that Bitcoin could reform the rally here. I just need to see more confirmation of it. Okay, guys, so let's go ahead and move on to this longer term chart. You guys have probably seen this version of the chart right over here before, where we see this trend line through Bitcoin, and Bitcoin is currently coming up to test it as resistance. Bitcoin's going to break through it and move to the moon. You guys know how this works. What we're looking at here is the log chart for Bitcoin. If we were to look at the non-log chart, then that line just goes up into infinity. But if you look at the logarithm chart, then it seems to match the chart pretty well. It also seems to show that during the accumulation phase and during the run up to the actual second half of the bull market, Bitcoin will be below this level. And then around the time Bitcoin starts really going parabolic in the bull market, it gets above this line. There's a lot of technical analysis that's done with this line right here. But the main thing I want to do in this video is actually extrapolate out this line and see if the predictions it makes for the future are anywhere near valid and whether or not they're actually useful to us. Because if we zoom out here, guys, as you can see, if you extrapolate this out and you drag this out, this puts us going to around $1 million sometime about halfway through 2025. If you draw this a little bit differently, maybe we go to $1 million in 2024 or in 2026. Point is, sometime in the mid 2020s, we should expect Bitcoin to go to $1 million if this chart is to be followed. So I want to go ahead and play devil's advocate here, guys, because you know that I do believe that Bitcoin is going to go to $1 million, and I also do believe that markets move faster than we give them credit for. If you want an explanation for how exactly Bitcoin could and probably will go to $1 million, click this video up here in the top right. So let's use the bullish case first. Let's say that Bitcoin will go to $1 million by 2025. How could that possibly happen? Well, let's go ahead and remember all of the bullish things that are happening to Bitcoin right now, guys. Right now, the last year or so, Bitcoin has really started to be on-ramped and adopted into a lot of traditional spaces. We have ICE, Intercontinental Exchange, developing back with TD Ameritrade working with a partner to develop a new cryptocurrency exchange. That's not really in the news. You don't really see about that unless you go on TD Ameritrade's website. We also have that Bitcoin ETF that is almost certainly going to be in effect at least by the end of 2022, guys. It will probably be in effect by the end of 2020, to be totally honest. We have all kinds of new adoption stories every single day. You go on Cointelegraph, you go on Coindesk, you go on Cointelegraph, you go on any of these different news websites, guys, and every single day we're seeing new bullish adoption stories. The space is looking remarkably bullish. Everything is really going according to plan, guys. The development in the space is going well. The regulation on Bitcoin is starting to become a lot more clear. It's really just not as hard to do business in the cryptocurrency space as it used to. Not only that, guys, Bitcoin is starting the fourth bull market of its history. We had one over here, one over here, one over here, and now we're getting into the fourth one. Guys, Bitcoin has a lot of room to run in this. If Bitcoin goes to $50,000, $100,000, $250,000 during this bull market, you know how much attention that's going to grab? That's going to, one, grab the attention of every single power player on the entire planet, but it's also going to grab the attention of all these other little people like us who want to make money and actually profit in these markets because they realize, oh wow, there's a gigantic opportunity that I'm missing out on. So guys, yes, the reason that we look at the log chart and the reason that the log chart is so powerful is because it does work on exponentials, and cryptocurrency does grow exponentially. The only real question is, will Bitcoin continue to grow exponentially on into halfway through the next decade? That's the question. And I'd say the answer is a mixed bag, because all of those fundamentals can continue to grow Bitcoin exponentially for a while, but they can't do it forever, because eventually Bitcoin is going to reach saturation, because eventually Bitcoin is going to have tapped the markets that it works in. Eventually everybody who was ever going to be interested in trading Bitcoin is already going to be invested. Eventually all the world is going to be either friendly or anti-Bitcoin, and the lines are going to be set. Eventually things will start to slow down and Bitcoin will start to plateau, and Bitcoin won't be rallying like crazy every couple of years. The real question is, will that happen before we hit that $1 million mark? And the answer to that, I think, is maybe, because I do think that Bitcoin is going to plateau off somewhere above $1 million, but I also think that it's going to happen sometime in the 2030s, guys. I'm a major advocate for believing that things happen a lot faster in markets than we like to give them credit for, but at the same time, I think that it's a little too early to assume that Bitcoin is going to go to $1 million in the span of just 7 short years. I want your thoughts on this in the comment section down below. Is Bitcoin going to go to $1 million before the end of 2026, guys? Is that too early? Is that plenty of time? I want to hear your opinions on that. That's enough time for 2, maybe 2.5 bull markets before we actually get there, so maybe Bitcoin can go to that by then. Nevertheless, I think before the end of the 2030s, Bitcoin will be trading at 7 figures, and I also think that now is a phenomenal time to be getting into cryptocurrency if you're looking to invest for the very long term. So with that all said, guys, let's go ahead and get on to the main news story of today's video. The Federal Reserve has cut interest rates for the very first time since the 2008 financial crisis. If we look here at this chart on macrotrends.net, if I remember, I will link this in the description down below. This chart shows the history of the Federal Reserve interest rate. And if you guys don't know, the federal fund rate is the rate that banks base their rates off of. So if you see a rate change on the bank's end, it's probably because there's been a rate change on the Federal Reserve end. The reason that the real estate market, for example, did so well starting around 2010 all the way up until a couple of years ago when it started to plateau a little bit was partially because money was free. You could get a loan for like 2%, lock that in on a fixed rate 30-year mortgage, and get a ridiculously high cash flow rental property, and the real estate market surged. That's part of the reason we've been in a bull market in stocks for the last 10 years is because federal interest rates have been on the floor. The economy has been doing very well. As you can see here, the Federal Reserve raised interest rates very quickly from 1% in 2004 all the way up to 5.25% right before the 2008 financial crisis and the subsequent massive Great Recession. If you guys are watching this video, you probably are old enough to remember this and remember the impacts it had on you. I certainly remember the impacts it had on me. This was a gigantic catastrophe. And if you'll notice, during recessions, these gray areas right here, those represent recessions. As you can see, we can toggle recessions on and off. Typically, the Federal Reserve lowers interest rates during recessions. And forgive me if you've already heard a lot of this before. I'm basically just trying to catch those who are not very familiar with this kind of stuff up to speed. If you've already seen this, just skip about a minute forward. Typically, the Federal Reserve, like I said, will lower interest rates during recessions. The reason they do that is because when you lower interest rates, it's much easier for people to go and take loans out of banks, and it's much easier for banks to take loans from the Federal Reserve. And when they do that, you can take a loan and use that as stimulus in the economy. People can go borrow money, put it into the real estate market. People can go borrow money and start new businesses. People can go borrow money and do whatever they want with it. They can go borrow money and buy a new car. Whenever you have lower interest rates, it's easier for people to borrow money, and then when they borrow that money, they can use it to inject it into the economy and restart the engine of the economy. Which is why during bull markets, typically the Federal Reserve will actually raise interest rates. As you can see here, over the last 3 or 4 years, the interest rates have been going up. The Federal Reserve has been rising them. The last time that we saw an interest rate cut was back in 2008. We haven't seen that happen until literally just yesterday. That's the news we're going to get to here in just a second. The Federal Reserve has been raising those interest rates while we're in a bull market and while the economy is doing very well, so that we build up a buffer that we can cut from, because the Federal Reserve can't go into negative interest rates. The lowest they can drop them is 0%. So they want to raise them during the good times so that during the bad times they can cut them and then use that as stimulus to reignite the economy. So with that little crash course out of the way, let's go ahead and dive on into the news here. The Federal Reserve cut interest rates rates on Wednesday for the first time in more than a decade, as we just saw, as it tried to keep America's record-long economic expansion going by insulating the economy from mounting global risks. One of the things I'm talking about in today's video is this Federal Reserve cut an indication that we may be going into a recession, or that the Federal Reserve thinks we're going into a recession? No, I don't think that's what they're doing, but I will go ahead and read on because that's something they actually talk about in this article. The outlook for the U.S. economy remains favorable, and this action is designed to support that outlook, the Fed Chair Jerome H. Powell said at a news conference after the decision. The cut, Mr. Powell said, was intended to ensure against downside risks from weak global growth and trade tensions. And while I am one of the last people who would just take the government at face value, I think he's absolutely right here. I don't really see a massive recession forming just yet. There might be one in the next couple of years, but right now, people have been crying wolf for the last several years. I don't really think we're just about to just crash into a gigantic recession. I think it makes sense to take him at his word and believe him when he says that the main reason they've cut rates is to ensure that the economic growth that we do have continues. Also, on a side note, one of the other reasons why this may have happened is because, as you guys know, Donald Trump is not exactly the biggest fan of China, no matter what he says. He does want America to pull ahead of China. By the way, guys, we are going to tie this back into Bitcoin here in just a second. I'm just building the foundation so we can get there. On a side note, though, guys, as you know, Donald Trump is not exactly a fan of China. No matter what he says, he obviously wants America to be the stronger one in the trade war that's going on. And perhaps he kind of poked Mr. Powell on the head and said, hey, dude, lower interest rates, it'll help the economy and we can get ahead of them. But to wrap up here on this side, before we get on to how this ties into Bitcoin, he does say that it's not the beginning of a long series of rates cuts, but I also didn't say it's just one, which means there may be a couple more, but at the same time, what that does not mean is that it's going to be a gigantic cliff dive of rates cuts as we saw in 2001 and 2008 to prevent a recession. It doesn't seem like the Fed thinks we're going into a recession, and normally the Fed has at least a somewhat decent track record of predicting when we're going into a recession, as you can see as evident on this chart here. Typically when the recession is happening, they're already dropping rates before it even started. So guys, how this ties back into Bitcoin. As you know, those Federal Reserve rates were cut yesterday on Wednesday, and it just so happens that we do have a chart here that we can look at for Bitcoin's price action to see what happened on Wednesday. Sis, that's pretty interesting. Bitcoin was rallying on Wednesday, so Bitcoin was moving to the upside in quite a bullish manner, one of the most bullish ways that we've seen in the last couple of weeks. Bitcoin was rallying during interest rate cut. Okay, well that seems to be bullish for Bitcoin. One reason why that may be happening, as explained by this article, is because as Federal Reserve interest rates are cut, what that means is that money is less lucrative. Back here in the 60s and 70s and the 80s, guys, interest rates on the federal level were up close to 20%. You could hold your money in a CD and be set for life, but at the same time, if you bought a house, you were screwed for life. But since interest rates have been so low for so long, putting money in a savings account or in a CD and just letting that money grow is very, very unprofitable, and it just got 0.25% less profitable here yesterday, which one of the potential implications of that could be that people are going to be less interested in keeping their money in the US dollar, and they're instead going to look to invest it more because there's higher returns relative to what they could have gotten in a savings account or a CD or in financing a hard money loan, for example. We're going to see just how this affects the cryptocurrency market, guys. I don't think that this is going to have a major impact on the cryptocurrency market. What I do think would have a major impact on the cryptocurrency market is if we did actually go into a recession, or if something major happened because of this. I think that if anything is going to affect the cryptocurrency market, it'd be a secondary effect based on this. It would be something that the Federal Reserve rate changing caused, and then that thing would cause a change in Bitcoin. But guys, I did want to bring this to your attention because this is a major news story. This hasn't happened in more than a decade. It's something that you guys do need to be aware of if you're going to keep up with the news in this space. So I hope you guys did get the value out of this video. Anyway, guys, that's pretty much going to do it for today's video. But if you did enjoy today's video, I would implore you to check out the Cryptocurrency Technical Analysis Academy, guys. CT2A helps to keep the channel running and funded so that everyone can continue to get paid and we can continue to bring you guys content here on a daily basis. It is not cheap to run this channel, and you guys who join the Cryptocurrency Technical Analysis play a big role in making sure that that continues. If you want to learn how to do technical analysis, guys, I highly recommend you join us. We have 33 videos, over 9 hours of content. I'm soon going to be updating this and adding even more videos. I want to flesh this out eventually to 50 videos and about 15 hours of content. There is a lot of concepts that I want to add here, but guys, the content that is here is worth a lot more than is actually being charged for. I've seen courses charge $1,000, $2,000, $500 for this content, and even less than this. I've seen courses sell with thousands of people buy them for a couple hours of content and everybody eats it up. Guys, if you want the best value course out there, I've looked at all of them. I'm not going to name any names, but I promise you that the competition doesn't hold a candle to what we're offering here. If you want to learn how to do technical analysis on cryptocurrency markets, if you want to learn how to plan and execute profitable trades so you're no longer putting yourself at risk and selling short and not using stop losses and not understanding how to actually plan the trade so that you can structure the trade and know what you're doing in the trade before you make the trade, then this video is for you. If you want to understand the mass psychology of the markets and understand why the markets move in the way that they do so that you can then actually predict those markets and make profit, this video is for you. If you want to learn how to actually tap into that gut feeling that you have and use those instincts and inclinations that you have to your advantage rather than them just corrupting you and making you make the wrong trade or sell too early or not use a stop loss because you're overconfident, this video is for you. If you want to learn how to dollar cost average, this video is for you. If you want to learn about a very important concept called the convergence of support and resistance and the convergence of short-term and long-term trends, something that you probably never even heard of, but is actually extremely important for cryptocurrency technical analysis, these two videos are for you. If you're newer to the space and you need to learn the very basics, these videos up here are for you. Guys, if you want to learn how to be profitable in the cryptocurrency market, the Cryptocurrency Technical Analysis Academy is for you. The 750 nearly people that have gone through the course always tell me how much they enjoy the videos. If you want to join our growing community of successful traders, then I highly recommend you check out the Cryptocurrency Technical Analysis Academy with the link in the description down below. The coupon code 25K2019 will be expiring at the end of Friday, which is tomorrow, which means you only have 48 more hours to get into CT2A before that sale runs out. If you want to get 20% off the course and $40 off, I recommend you do that before the sale runs out. Anyway, guys, like I said, join us with the link in the description down below. I do look forward to seeing your pretty face over there. Anyway, guys, that is going to wrap it up for today's video. Let's get a conversation going in the comments section down below. I want you guys to click the poll in the top right and tell me whether or not you're bullish or bearish on the short term for Bitcoin and how you believe Bitcoin is going to move over the next couple of days. I also want to hear your opinions on the Federal Reserve cuts here. Do you think the director of the Federal Reserve, Mr. Powell, is being genuine when he says that he doesn't expect a recession coming, or do you think that's all smoke and mirrors and that there is actually a recession coming and they're trying to prepare the US economy for that? Anyway, guys, that is going to do it for today's video. I do hope you did enjoy today's video. If you did, make sure you hit that like button, and if you're new here and you've stuck through everything, make sure you hit that subscribe button and the notification bell, guys. We do cryptocurrency videos every single day, and I wouldn't want you to miss any of them. Anyway, guys, like I said, that is going to do it for today's video. I do want to thank each and every single last one of you for watching, as always, guys, and I will see you guys in the next video. Peace.